What's up, you guys? Welcome back to the channel. In today's video, we're going to answer the question that everybody wants to know: how much money you need to get started in real estate. Let's get started. So anytime you ask somebody how much money I need to get started in real estate, the short answer is always it depends. Well, here in today's video, we're going to talk about exactly what it depends on. Okay, so now you're ready to invest in real estate. You looked it up. You know all the tax benefits. You know all the appreciation benefits. You know how wonderful real estate is. But now you want to know, how much money do I need to get started? The first tip we're going to start off with is don't invest with no money. So don't go into real estate investing with absolutely no money. I know there are websites and webinars and courses you could buy that tell you start investing with someone else's money, get into real estate with zero money. I believe in those things and I'm sure they work, but on this channel we're going to talk about how to start investing in real estate for an absolute beginner. I think those are more tricky and sneakier ways and more slick ways to invest in real estate, but we're going to talk about the average Joes looking to invest in real estate, people who have 9-to-5 jobs or have small businesses, and the people in that kind of category, not somebody that's got tons of time to look into how to invest in real estate with no money and all this and that. So the magic number we're going to talk about is $30,000. To get started in real estate, you will need about $30,000. Now I know that's a super generic and general number because you could be talking to somebody that's looking to invest in one single apartment, or you could be talking to somebody that's looking to invest in a multi-million-dollar property. Now, obviously, that $30,000 is just a starting point, and I would encourage you guys to have at least 12 months of reserve for money that you need access to on a daily basis. Now, when I say have 12 months reserve, I'm talking about having liquid cash in your bank account to be able to pay for things like insurance deductibles, and God forbid if something were to happen like a car accident, or if you have an unexpected car issue, make sure you have money set aside so that you can be able to get past those hurdles if something like that or to, God forbid, happen. Now, let's say you have 12 months liquid cash reserve sitting in your bank account. Let's talk about costs associated with purchasing an investment property. So the first cost associated with investing in a property is lending costs. So let's talk about a down payment. When you're looking to invest in a property that's not a primary residence, usually lenders will ask for around 20 to 25% down. So if you're looking to invest in a $100,000 property, the bank or the lender will ask you for around $20,000 to $25,000 as a down payment. Now that number can vary depending on income, credit score, and a few other things, but usually a safe bet is between 20 and 25%. Also, on the other hand, there are ways of putting way less money down with things like FHA, which is a first-time home buyer. You could put anywhere between 3 to 5% down and do things like house hacking. So for example, you could purchase a home and live in it and then rent out a small portion of that house that you bought as your primary residence. That's referred to as house hacking. Another cost associated with lending is what's called closing costs. Now again, this is a huge range, so there's a number that I can give you guys, because again, it'll depend on how much of property you're looking to buy. So if you're looking to buy something for $50,000, the closing costs associated with that $50,000 property are way different than a property that's worth $250,000, for example. Now another cost associated with lending is what's called reserves. So a lot of lenders will ask to see liquid cash of at least 12 months of expenses sitting in your bank account, because they want to make sure you're not in over your head. So they want to make sure, again, that you don't purchase a property and have enough money to only fund it for around a month or two. So they want to make sure you have at least 12 months sitting in your bank account. The next item we're going to talk about is rehab versus rent ready. So if you want to rehab something, you basically buy a distressed property, fix it or rehab it, and then turn around and sell it for a profit. Whereas on the other hand, if you want to get something rent ready, you don't go all out and tear out walls and put in spray foam insulation and do that kind of thing. Most times you're tearing out old carpet, putting down laminate or engineered wood flooring, and making the place look a lot nicer. Doing things like a new paint job, painting trims, doing that kind of thing just to make it look a little bit nicer and more appealing for people to rent. So again, that cost between getting something rent ready and rehabbing something is a huge scale, and it's something that you have to decide on per property. Another thing you need to have money set aside for is what's called a vacancy expense. So basically you purchase a rental property, and for whatever reason that rental property is not being rented by somebody, you need to make sure that you have enough money set aside to be able to carry that property until you're able to re-rent it out to somebody and have them pay the mortgage for you. The next item we're going to talk about is capex and maintenance reserves. So again, you want to have a little bit of money set aside in case something goes wrong in your rental property. Now, as a new investor, you always hope that nothing goes wrong, and in your head you say, What's the worst that can happen? A light bulb goes out, this and that. I'll go change it myself. Guys, I'm telling you, from experience, I own a business where we deal with people's homes that have water damage, fire damage, have mold, that kind of thing. I know things happen like this, and you need to make sure that as a landlord, you have money set aside for unforeseen emergencies. One example I heard of was a water heater is the same price in a $60,000 home as it is in a $500,000 home. So it doesn't matter where you are on the spectrum as an investor, you need to make sure you have money set aside, because a water heater will go out in a $1 million house and a $50,000 apartment as well. The next item I want to talk about is paying down your personal debt. Now, when you want to go take a loan out for an investment property, odds are they're going to look into your credit and debt to income ratio. So the less debt you have, the better rate that you're going to be getting on your terms for your rental property. Some of the main things that you want to consider paying off are credit cards, personal loans, and car loans, as those will all negatively affect your debt to income ratio. So basically, when a lender looks at you, they see how much money you make and how much expense you have every month. And if it makes sense for them to lend you the money, they do it. So obviously, the less expense you have, the more income you have, the more trustworthy you are to them, and you get a better rate for your money. Now guys, when you get close to having that reserve money set aside, start looking in your local area and anywhere that you're interested in investing. Get to know the area, talk to people like property managers, contractors, and anybody that works in that area. Another great person to talk to would be realtors. They know, that's their job, to know what areas are good for rental, what areas are good for flipping. So don't wait until you have your money in hand and then start doing this stuff. Prepare for it while you're saving up your reserves. And the last, most important thing you need to do is make sure you smash that thumbs up button and subscribe to the channel. But there it is, guys. That's all I have for you in today's video. If you enjoyed the video, please go ahead and smash that thumbs up button and subscribe to the channel if you haven't already. Guys, don't forget to talk less and do more. I'll see you guys in the next video.